So another down day for North American markets. Big tech getting beaten back again. Let's find out what else is slamming the Santa Claus rally. Brian Belski joins us now, CEO and Chief Investment Officer at Humilis Investment Strategies. Thanks for joining us today.
Thank you so much for having us. Good afternoon, Canada.
Why are investors still backing away from big tech?
Well, I think it's a couple things. Number one, I think there are some general concerns with respect to the concentration of tech stocks over the last 12 months. We remain very positive on the technology front, especially AI, for the next 12 to 24 months. I'm sure we'll talk a little bit about that. Number two, I do believe that some of the concerns with respect to what's happening in terms of CapEx and or the lack of clarity with respect to CapEx with AI going forward to scare people. And number three, quite frankly, these stocks have been very strong since the beginning of 2023. You have to remember that technology was crushed in 2022, mostly because of where valuation was and where inflation and interest rates were. But the snapback rally in 23, the AI-induced rally in 24, the very, very volatile trading that we've seen this year because of what's happened in terms of first the tariffs and then right back on the AI train again. I think a lot of investors are a little bit nervous in terms of the volatility, but we think we're still on the second or third inning of AI. And we think the Santa Claus rally that everybody was talking about, really the Grinch, quote unquote, has taken over. That's for sure.
Yeah, we can see that. Do you see this trend continuing into 2026? Do investors tend to reset at the start of the year?
They do tend to reset. It's a wonderful question. You know, in Canada, you have RSP season, and a lot of investors want to look to longer term money. We would continue to say to buy those best companies. I think the major difference between 2026 and 2025 is going to be this notion of the term dispersion. A lot of investors don't know what that means. I think that the best way to be able to explain it is not every tech stock is going to go up. It's going to be really difficult to buy a broader index. It's going to be all about owning individual names, not Google and Meta, for instance, just maybe one of them, not Netflix and something else, maybe just one of them, not AMD and Broadcom, maybe just one of them, just to name a few of what everybody wants to talk about. In Canada, we think that benefits Canada because Canadian strength has been so dominated by the materials and financials this year. We do think energy could do better in 2026, especially as global growth comes back. And then lastly, we do think that banks in Canada are not going to be as strong as they were in 2025, principally for two reasons. Number one, 2025 outperformance has really been driven by the majority of banks over-reserving. They set aside too much money. And number two, we've had a big valuation move in some of these big Canadian banks, and some of them have very differing fundamental outlooks. So we do think it's going to be actually more of a stock pickers market within the six big Canadian banks in 2026.
Okay, I do want to get your take on the wider U.S. economy. Inflation numbers get released tomorrow. Do you expect much of a market reaction?
Well, the market clearly reacted to the unemployment numbers that we received. Now, remember, the Fed has a dual mandate in the United States, inflation and the unemployment situation. And there's a lot of volatility with respect to what numbers to believe in the unemployment situation, especially given that the volatility of the BLS numbers, number one, and number two, the government shutdown. And you even hear from the Fed chairman himself not really believing the numbers. So inflation needs to be more muted. We believe, I think the market is acting and wanting more interest rate cuts. Remember, we've reared an entire generation of investors that only believe that they should buy stocks because interest rates are going down. We at Humilis don't necessarily believe that. We do believe that stocks are run by fundamentals, not by interest rates. So that's why we think, you know, from an inflation standpoint, we think inflation over the next 12 to 24 months will become more and more muted, and that's the longer term trend.
Okay, I do want to get to one or two of your stock picks. Netflix is the first one. And what did you think of the Paramount deal? Not a done deal yet, or sorry, the Warner Brothers deal, not a done deal yet. They're going up against Paramount, but what did you think of it?
Maybe they should buy Paramount too. I don't know. No, the Warner Brothers deal, we've owned Warner Brothers for a couple of years in our small mid-cap portfolio that we've overseen for a while. And the issue with Warner Brothers has always been the debt side of things. And Netflix is obviously the greatest content creator, we believe, of the streamers, at least one of the one or two. And we think Netflix, with its cash going forward, is going to be just fine. I think this deal makes a lot of sense. I don't believe that the Paramount noise will get in the way of this deal. And I think ultimately Netflix will win Warner Brothers.
Okay, do you want to get one more pick quickly from you, and that is Google. What do you like about Google next year? Of course, YouTube just got the Oscars.
Yeah, YouTube. You know what's interesting about YouTube? I don't think a lot of people understand that YouTube is actually bigger than Netflix. And I think YouTube is going to continue to flex its muscles. We believe they're going to get even bigger into sports. The part of the reason why earlier in the year we doubled our position in Google is because investors rushed to judgment and thought that ChatGPT was going to take over search, and that's really Google's core business, at least in the beginning, but they kind of forgot about how great this YouTube business is. And so we think Google is one of the preeminent, not only technology and communication names, but really preeminent names in the world. You got to think too that Google brought back a couple of its founders and early leaders earlier in the year, and that really spearheaded them into doing these joint ventures with Apple. And now what they're doing going forward in terms of some other ventures. So we think Google is exquisitely positioned for the next 2 years.
Brian, got to leave it there, but appreciate your time. Brian Belski joining us.